Hello and welcome to your Daily 5 with myself, Jane Gallina, also known as Airplane Jane. I'm out there on social media on Twitter, Instagram, YouTube, LinkedIn, my website, cjanetrade.com, and also if you have any questions, please feel free to email me at jane@cjanetrade.com, or you can reach out on social media as well. So first up, we're looking at the big picture, looking at the SPY. And right now we have one of the rarer formations of a diamond top, right? We go like this, like this, like this, and right on up here. So this, about 75% of the time, technically speaking, is going to be a reversal. So it is a rare pattern to see at the top of an upward run like this. 25% of the time, it does mean that it fails. So watching this to see the direction that the market's going to take. We have a debt ceiling resolution, likely a bigger move up like this from 380 up to around 405, we'll say. So 25 points, potentially putting us up at 436 for a move up, or a breakdown below the 409 area, back down to likely the 390 area. Oops, that wasn't so straight. Or back down to 380. So keeping this on watch for the bigger picture. Is it the sell in May and go away type scenario for the next 3 months down? Or are we going to have a nice debt ceiling resolution and we pop up back up to 436? When we look at it on the weekly chart here, we do see this big selling area, which is just below us, right? And we have a resistance that you can see with the price line right here, where we're butting up against this support resistance area. We have only gone above this temporarily last July-August period, but we've stayed below it until then. On the bigger picture here, we do have an ascending triangle. So looking and waiting. The name of this right now for me is waiting for confirmation for the bigger picture, longer term holdings. On the banks, we saw, if you go back and you look at the Federal Reserve requirements, March 26th of 2020, they made the Federal Bank Reserve requirements 0. So all of the debacle that we have seen with liquidity started March of 2020. It is now catching up with them 3 years later. We are on the daily chart here, and we do look like we have a bit of buying that has come in around the 31.75 area. Breaking above 33 is really going to give us that bigger move to the upside. However, this could also be a bigger picture with FDIC saying, hey, we're going to take more money from the big banks, a lot of the XLF holdings, to pay off for the regional banks. When we look at the big picture for banks overall, we have this big selling area right here at 35. So looking for a bigger move up above 35 or below 30, waiting to see where we go. We are in a bit of a downward trend, short bounce, but the failures that happened in March and also in April have played a role, which were mostly regional banks, right? So here we have KRE, the regional bank ETF, and we can see that roughly at 39, that is our big area to watch for breaking above. We do have some green buying coming in with support down here around 36. When we look at it on the big picture, it's not so pretty. We have the equi-volume candles. You can see that in March, big selling happened at $60 range. Now we see that the buying has come back in at what used to be our resistance. Right now it is flipped to be support. So likely they sold. Bigger selling that happened right here around 45 as well. Big volume of selling right there. And then we have our support that's come back in around $35, $36. So we are caught in between at the moment without a clear picture as well as to what's going to happen with this debt ceiling. We have more people that are using their savings to pay for their high interest that they racked up when zero interest was out there, flex rate mortgages, car loans, credit cards, and less money coming in as people are getting laid off. So there's an outflow of liquidity for the banks. This is creating the liquidity crisis. So where have we seen the money go in the dark pools to hedge against these bank failures? Well, we saw it happen in gold, right? Here is back March 10th. We saw a massive gold move up. People look to gold during this past time frame as a safe haven, and it did have a nice run. Gold moved up about 17%. Correction, 17%. And then we saw that we had some short selling on the futures, which then drove the price down. That happened right here, drove the price down. More buying came in at roughly the 184 area, and then a bit more selling at 190. So looking to see if we can break out up above 190. If I were to get in here, I would use about 182.50 as my support to watch longer term. When we look at it on the weekly chart here, we see that it came down when we had that selling before the bank failures. It came down to the 33 exponential. This is one of my favorite moving averages. If you have not used it, try it out. I absolutely love it, especially for commodities. So if we were to drop, likely 176.23. However, I think, in my opinion, we are going to see that all this big buying shelf that we have right here, likely a turnaround, potentially going in the next couple of weeks with this debt ceiling looming over us. The other precious metal that actually had a bigger move, we saw 40% gains on silver during this time frame of the bank failure. People started piling in. The shorts that had shorted silver over time got caught and they had to buy, particularly this day when they were reaching a resistance of 22, and boom, everybody came into it. Now we've seen a couple of big selling candles right here, right here, right here, and right here. So looking to see if this can truly hold the 2180 area and continue to move back up. We do have a nice gap here of this candlestick. The market loves to fill gaps. So looking for a 2220 break to move up, potentially just up to 2252. However, we could go all the way up to 2280. Once we fill that gap of this candlestick, there's another one right here. Oh my goodness, I love silver. Now with this debt ceiling, everything that could be potentially happening, if we were to step it back and look at the BRICS model of backing currencies with metals, we could see that precious metals could really skyrocket. So in my opinion, diversifying into physical metals, silver and gold, is never a bad thing. And they're at a nice little discount now, not as low as they were back in March, but a nice discount to hold on to some physical assets should we see that the dollar's power of being a global currency set up by Bretton Woods in 1944 is usurped by BRICS, Brazil, Russia, India, and China, backing their currencies with gold. That's your Daily 5 with myself, Jane Gallina. If you'd like to, there's the weekly. If you'd like to see me every morning, 8:15, grab some amazing potential day trades, please come to my YouTube channel and carpe profit, seize those profits one trade at a time. Have an amazing trading day.